Hello students, myself is Parminder Singh from Prab Kirpa classes. Our today's topic is understanding and addressing balance of payments imbalances. We have already learned that balance of payments is a systematic record of all economic transactions which take place between the residents of one country and the rest of the world during a specified period. What it means? It means that a country may be exporting certain goods and services to the outside world, and it may be also importing certain goods and services from the rest of the world. A country may be giving some loan to other countries, or it may be receiving loans from the other countries. It may be making investments abroad, or it may be receiving investments from abroad. Sometimes it may be giving aid on humanitarian ground to other countries, that is the rest of the countries, rest of the world, or it may be receiving some aid or donations or gifts from the rest of the world. So balance of payment is a record of all these economic transactions. So all these economic transactions either result into inflow of foreign exchange or outflow of foreign exchange. Either foreign exchange is coming into the country as a result of these activities, or foreign exchange is going outside the country. So three situations arise due to these activities, and what are those? Outflow may be equal to inflow, outflow may be more than inflow, or outflow may be less than inflow. That is either foreign exchange which we are getting may be more or less or equal to inflow or outflow, as the case may be. Now we will also understand what are the reasons which contribute to the imbalance in the balance of payments position. Why inflow of foreign exchange is not equal to the outflow of foreign exchange? The possible reasons may be exports may be less than the imports, or there may be natural causes such as droughts or floods, or the other reasons may be capital flight or demonstration effect, population is increasing. These are some of the factors. We will discuss all these in detail. Then we will also discuss what steps can be taken to improve the balance of payments position. We can take certain steps to increase exports, to decrease imports. We can take steps to improve, to attract the foreign investors. We can also take steps to reduce the bureaucratic hurdles. We will discuss all in detail in this course. Then we will also discuss that autonomous transactions are also known as above the line transactions, and these transactions are undertaken with a profit motive in mind. And if any imbalance arises due to the autonomous transactions, then to balance out the imbalance in the balance of payments, accommodating transactions which are also known as below the line transactions, these are undertaken, and these transactions are undertaken by the government. We will discuss all these in detail and hope you will find this course very useful. Now the topic before us is exploring equilibrium, positive and negative in balance of payments. In the case of balance of payments, as per accounting sense, balance of payments is always balanced. But in the economic sense, balance of payments may be balanced, or sometimes it may be surplus or even deficit. The reasons for the same may be economic reasons or policies of the government and some other reasons. Before proceeding further, we should have an overview of how balance of payment looks like. Balance of payment looks like a accounting statement in which there are two sides. One is debit side and the other is credit side. Credit side is shown as positive and debit is negative because In the case of debit side, we record all outflows of foreign exchange. Here we record all inflows of foreign exchange. That is, in the case of debit, we take all those economic transactions due to which there is outflow of foreign exchange. And on the credit side, we take all those economic transactions which result into inflow of foreign exchange. For example, if we export goods or export services, what it means? It means that foreign exchange comes into our country. So, export of goods and export of services are taken on the credit side because they result into inflow of foreign exchange. On the other hand, if we import goods and services, what happens? If we import goods, then we will have to pay foreign exchange. So these are recorded on the debit side of the balance of payments. Here we write import of goods, import of services. We may also add that when we are talking about goods, these are also known as visibles because goods can be seen and touched. On the other hand, services are also known as invisible items because the services such as banking, insurance, shipping cannot be seen or touched. So there are some other items also, such as in case of need, such as on humanitarian ground, we may get foreign aid, or we may also receive some gifts, or we may receive donations from the rest of the world. So when we receive unilateral transfers, it means inflow of foreign exchange. Unilateral transfers received. On the other hand, if we give donations, aid to the rest of the world on humanitarian ground or due to some other reason, these result into outflow of foreign exchange. So unilateral transfers paid to the rest of the world. So in the same way, when we make investments abroad, then we may receive dividend, profits, or rent from investments abroad. So these are the income received in the shape of rent, interest, dividend from abroad. In the same way, if foreign people have invested in our country, they may receive income in the form of interest, profit, dividend, and rent, income paid abroad, paid to abroad. And in the same way, sometimes we receive or borrow money from abroad. When we borrow from abroad, what it happens? Then foreign exchange comes into our country. And when we lend to abroad, foreign exchange goes out of our country, lending abroad. Then sometimes we make investments abroad. If we make investments, then what happens? Foreign exchange goes outside our country. investments abroad. And if we receive investments from abroad, then foreign exchange comes into our country. So this is the a broad overview. There are maybe some more items which might be appearing in the balance of payments. We are shortly writing it as BOP, but when you are to write somewhere, you are to make full form balance of payments. This is a short or brief overview of the balance of payments. Many more items will be appearing in the balance of payments statement or balance of payment record. So when we are talking about balanced BOP, what it means? Now we have having a bird's eye view of BOP, what it actually looks like. So balanced BOP is a stage or a situation when credit is equal to debit. It means that all total inflow of foreign exchange of the whole country is equal to the outflow of foreign exchange, total outflow of foreign exchange. Inflow is equal to outflow. Total inflow of foreign exchange is equal to total outflow of foreign exchange. In the case of surplus BOP, surplus means we are having credit is more than debit. So when credit is more than debit, it means that here we have written inflow of foreign exchange. Total inflow of foreign exchange in the country is more than total outflow of foreign exchange. That is, the foreign exchange which is coming into our country is more than the foreign exchange which is going out of our country. Inflow is more than outflow. When we are talking about deficit BOP, it means that credit is less than debit. So all the entries which will be appearing on the debit side of the BOP will be more. In other words, credit will be less than debit. So here inflow of foreign exchange is less than total outflow of foreign exchange in the country. So these are three different situations in respect of balance of payments. And if there is some disequilibrium in BOP, the government takes necessary steps so that there is equilibrium in balance of payments. We hope you might have understood this concept in very clear terms. Now the topic before us is identifying the culprits in balance of payments. Before we proceed further, we must understand the meaning of balance of payments. Every country is exporting certain goods and services to the rest of the world. In the same way, we are receiving certain goods and services. That is, we are importing certain goods and services from the rest of the world. On the humanitarian ground, our country also sends donations to the rest of the world, and at times our country also receives humanitarian aid. We may also receive gifts and donations from the rest of the world, and our country may also send donations, gifts to the rest of the world. That is, there may be unilateral transfers, one-sided transfers, which are sent from our country to the rest of the world, or which are received from the rest of the world. We sometimes we give loan to the rest of the world, and sometimes we receive loans from the rest of the world. Some of the residents of the country make investments abroad, and some foreign investors also make investments in our country. So, balance of payment is a record which makes balance of payment is a record which makes record of all these economic transactions which take place between the residents of the country and the rest of the country during a specified period. As already discussed, that balance of payments is follows the principle of double entry bookkeeping, where every transaction is recorded as a debit as well as credit entry. BOP record looks just like this. On one side, there are debit entries, and on the other side, there are credit entries. On the debit side, these are recorded as negative, and credit side is recorded as positive. On the debit side, we take all those economic transactions which result into outflow of foreign exchange. And on the other hand, on the credit side, we take into account all those economic transactions which result into inflow of forex. Forex means foreign exchange. Such as if we export goods and services, these result into inflow of foreign exchange. So these are recorded on the credit side. If we import goods and services, we have to pay foreign exchange. So these are recorded on debit side. If we receive unilateral transfers from abroad, that is we are receiving foreign exchange, these are recorded on credit side. If we are giving unilateral transfers, or that is sending aid or donations or gifts to other countries, then there is outflow of foreign exchange. If we are receiving loan, then it is inflow. If we are giving loans, lending, then it is recorded on the debit side. If the investments are coming into our country, these are recorded on the credit side. If investments are being made by the residents of the country to the rest of the world, these are recorded on the debit side, as there is outflow of foreign exchange. So in this way, the balance of payment looks like. There are many more entries there in the balance of payment statement, balance of payment record. So what is the meaning of disequilibrium? First, we should understand, before we go into the details of causes of disequilibrium in balance of payments, we must understand what is the meaning of disequilibrium in balance of payments. Disequilibrium in balance of payments means that the total receipts or total inflow of foreign exchange is not equal to outflow of foreign exchange. That is, the total receipts of money which is coming into our country is not equal to the total outflow which is going outside. Total receipts not equal to total payments. That is, debit and credit side are not equal. Either credit side is more than debit, or credit side is less than debit. So these are the two situations of disequilibrium in balance of payments. When credit is either less or credit is either more than debit entries, that is, the total payments do not match the total receipts of foreign exchange. So what are the possible reasons for the causes of disequilibrium in balance of payments? First is unfavorable balance of trade. When the imports of the country are more than exports, it means that if we say we are importing goods or services worth 1,500 crores, and on the other hand exports are only to the tune of 1,000 crore, then it is quite evident that here imports are more than export. When imports are more than exports, it means that in this example, it means that we are receiving only 1,000 crores of foreign exchange, whereas we will have to make the payment of 1,500 crores. That is, imports are 500 crores more as compared to exports. So there is disequilibrium of balance of payments. We will have to make the payment to the rest of the world. Next point is fluctuation in commodity prices. There are certain countries which make export of one particular item, say oil. If a country is very rich in oil, it exports oil to the rest of the world. Suppose at present the rate of oil is say $90 per barrel. Suppose its rate comes down to say $80 per barrel. We are not taking into account the exact market price. We are only assuming. So what will happen? The export value of the oil will reduce. So it will naturally affect the balance of payments position. When the exports value of the exports will reduce and import will remain constant, so it may result into disequilibrium in the balance of payments. That is, inflow of foreign exchange may be less as compared to outflow of foreign exchange. Next point is natural factors. Sometimes droughts may hit a country. That is, there may be shortage of rains in any country during any season. It may result into no production of crop at all or less production. In the same way, if there are floods in the country and the country is producing say rice, it exports rice to the rest of the world. And if there are floods, no doubt when rice is produced, enough water is required for rice, growing rice, but excess of everything is bad. If the water remains stagnant or the floods are there in the fields, the yield of the crop reduces or whole of the crop of rice may destroy. So due to these natural factors, natural disasters such as drought or floods, exports of the country may be severely affected. When the exports are severely affected, the country may or may not be able to export anything to the rest of the world during that particular year. So it may result into disequilibrium in balance of payments. That is, the in that case it may be possible that exports may reduce to minimum, and whereas imports will remain on the stable side, or imports may increase because the country which was sending rice or exporting rice may have to import rice in addition to the other imports. So there may be disequilibrium in balance of payments, that is the imports may increase export. Then other point is net outflow of unilateral transfers. We have already discussed that unilateral transfers are one-sided transfers. One-sided transfers means for which we do not get anything in return. At times we send aid or donations to the rest of the world on humanitarian ground, such as we may supply them food or medicines on humanitarian grounds. We may add that when we are sending supply free of cost to the rest of the world in the form of, say, medicines or food, then an estimation of the amount of that goods or services is made which is being provided to the rest of the world free of cost on humanitarian grounds, and an approximation or estimation of the same is taken into account in the balance of payments. So this is the way in which way we take into account the free goods and services to be taken to on record in balance of payments. So when we, so in this way sometimes we also receive aid, grants or donations from the rest of the world. So when unilateral transfers received are not equal to unilateral transfers sent abroad, it results into disequilibrium. That is, we may receive either more transfers, that is the foreign aid, or we net result may result into disequilibrium. For example, suppose we may receive, say, 1000 crore received in foreign aid from the rest of the world, whereas we send, say, 1020 120 crore rupees have been sent abroad as unilateral transfers. So what is the net? That is, we have there is net outflow of 20 crore rupees abroad. So when there is net outflow of unilateral transfers is more, that is debit side is more as compared to the credit side, that is we are receiving less payment in the form of unilateral transfers as compared to the unilateral transfers sent abroad, it results into disequilibrium in balance of payments. Then it may be also possible that investors of our own country or the foreign investors do not believe in the political and economic stability of our country. It may happen at times. So when the investors do not believe, or there is economic instability or political instability in any country, then the investors of the country or the investors from abroad withdraw their investment from that country, or the investors of that country also make investments abroad so that they may get best returns. Sometimes if higher interest rates are there in the rest of the world in comparison to the domestic country, then investors of our country may also send their money abroad. So the capital flight is also a reason for disequilibrium in balance of payments, as foreign exchange will go out of our country. Sometimes government policies also result into disequilibrium in balance of payments. For example, there may be some trade barriers imposed by the government. If the government reduces import duties, what will happen? If the government reduces import duties, it means that more things will be imported. And when more things will be imported, it will lead to when more things will be imported, we will have to make more payments abroad. That is, there will be more outflow of foreign exchange. If the government of the country puts restrictions on imports, what will happen? If the country puts restrictions on imports, then the imports of the country will reduce. That is, the outflow of foreign exchange will reduce. So in this way, there may be there is difference in the balance of payments. Next point is burden of payment of foreign debt. It is quite possible that any country has taken a loan from the rest of the world or the other countries, and it may have to make large payment of debt at any particular point in a year. So it may also result into disequilibrium in balance of payments, as foreign exchange which the country is receiving by way of exports, imports, or unilateral transfer or some other means, it may be less, whereas the country may have to make a very big payment of foreign debt, which results into disequilibrium in balance of payments. Next point is demonstration effect. In this digital world, we are connected to the rest of the world. Except one or two countries in the world, all over the world, we are connected with the rest of the world by way of internet. We are connected with the rest of the world socially, economically. We are having personal relations with them. When in under when the residents of the underdeveloped country see on social media platforms or by way of personal relations, they see that what are the clothings or what are the foods which they consume, what is their lifestyle. The people of the underdeveloped or developing countries try to imitate those people of the developed countries. So the residents, or if the residents of a developed or underdeveloped or developing country imitate the developed countries, so it may result into import of certain goods and services from the rest of the world. So when the imports goods will or services will increase, it will naturally result into outflow of foreign exchange, at it will ultimately result into disequilibrium in balance of payments. Next point is speedy economic development. If a country is taking steps that there is economic development in the country, there is investment environment is proper in a particular country, and the government is taking proper physical and monetary policy steps are also okay, there is political stability, and there is ease of doing business in a particular country, then all these steps taken by the government of the country result into speedy economic development. When there is speedy economic development in a particular country, it results into the increase in the income of the residents of the country. When the income of the people rises, what happens? They try to purchase not only the domestic goods which are available, but also try to purchase the imported goods. Because income level has increased, they will not only purchase the goods which are available domestically, but will also purchase those goods which are not produced locally but produced abroad and have been imported. When they will import, they will have the demand, goods will be purchased from abroad, there will be import will increase, and when the import will increase, foreign exchange outflow will be more, and it will result into disequilibrium in balance of payments. Next point is population growth. As shown in this figure, population is very less, it is slowly increasing. And what happens when the population of the country increases slowly, we will understand how it affects balance of payments. Suppose the population of the country is only 1000 and the country is exporting goods worth rupees $1000 to the rest of the world. We are only assuming number of population people or number of people. What is the population? It is only 1000, and we are exporting, and that country is exporting $1000 worth goods and services to the rest of the world. Suppose the population of the country increases. When the population of the country increases, suppose it is exporting, say, rice to the rest of the world. When the population has increased, it may be quite possible that it is only in a position to export rice worth rupees $700. So export has decreased. On the other hand, when the population has increased, it is also quite possible that more goods will be imported. So exports reduce, imports more. So there it will ultimately have disequilibrium in balance of payments. That is, the outflow of foreign exchange will be more because exports are reducing and we are importing more as compared to previous years. So all we have discussed all the points which may result into disequilibrium in balance of payments. A small and temporary disequilibrium is not necessarily a cause of concern. There may not be any problem if such type of disequilibrium, that is the flow foreign exchange is more in a particular year, it may not be a cause of concern. But if the outflow of foreign exchange continuously remains to be more as compared to the inflow of foreign exchange for many years in a row, it is surely a cause of concern for the government of the country, and the government of the country must take steps to see that outflow of foreign exchange is reduced and steps are taken that to ensure that inflow of foreign exchange is more. Now the topic before us is from red to black, redefining the color of your balance of payments with actionable strategies. In other words, it means how can a country improve its balance of payments position over the long term. First of all, the question arises, what is balance of payments? Balance of payments is a systematic record of all the economic transactions which take place between the residents of a country and the rest of the world during a specified period. A country may export certain goods and services to rest of the world and may also import other goods and services for its use. A country may send one-time transfer, such as it may give aid, donations or gift to other countries, or it may receive also at other times. Sometimes a country gives loans to other countries. At other times, the residents of a country may avail the loan from the abroad. Sometimes investors from our country make investments abroad, and sometimes foreign investors make investment in our country. So these are all economic transactions in which either foreign exchange goes out of the country or foreign exchange comes into our country. So balance of payment is a record which takes note of all these economic transactions. As already told, that balance of payments is just like this, where on one side we have debit entries and on the other side we have credit entries. All the outflows of foreign exchange, all the transactions which result into outflows of forex, foreign exchange, are recorded on the left hand side, and all the activities on account of which inflows of foreign exchange occurs are recorded on the credit side. When we are talking about the balance of payments position, how to improve the same, it means that either outflow is more than inflows, that is, we are receiving less foreign exchange and more foreign exchange is going outside. Improving balance of payment does not necessarily means that the balance of payments position has to be balanced, that is, credit should be equal to debit or credit should be more than debit. That is, balance of payments position should be either balanced or it should be surplus. This is the balanced balance of payment. This is when credit is more than debit, that is, inflow is more than outflow, it means that there is surplus balance of payment. When we are talking about the improving balance of payment, it does not necessarily means that balance of position payment has to be either balanced or surplus. Rather, improving balance of payment means that if there is any imbalance, it has to be within a certain range, within a manageable range. It should not be excessive. If there is any deficit in the balance of payments, then it should not be excess. That is, it is not that key outflows are exceed quite in large numbers than the inflows. For example, we may say that, say in the previous year, our country received 1000 crore rupees as inflows, as inflows. On the other hand, the outflow was only 90 crores. It may be also quite possible that in the previous year inflow was 1000 crore and outflow was say 90 crore. That is, overall, either the balance of payment was either stable, neutral, balanced, or we were receiving more inflow of foreign exchange. But when we are talking about the improving the balance of payment position, it means that it should not happen that in the previous year there was normal or may not have been normal, but it does not mean that it should be abnormal balance of payment position. That is, it should not happen that our outflows are, we are taking just example, or our outflows are 2000 crore and our inflows are only 90 crores. That is, there should not be abnormal difference in debit and credit side. That is, it is not that there should be huge gap in inflow and outflow. Improving balance of payment means we have to take steps to keep the difference between inflow and outflow to the manageable level. There should not be abnormal increase, or outflow should be at a quite higher level. How? What steps which can be taken by our country to improve the balance of payment position? What steps we can take, our country can take? First is enhancing exports. These are some of the steps which can be taken: enhancing exports, reducing imports, attracting foreign direct investment, managing debt and financial flows, the long-term structural reforms. Now we will discuss each of these one by one. First is enhancing exports. To enhance exports, what steps can be taken? First is that we can reduce export duty. Export duty to be reduced, or we can give incentives to exporters. It may be in the form of cash or in the form of certain other methods. Or not only reducing cash export duty, we can also give rebates in income tax to exporters, or we can also give some sort of rebates in some local taxes which we impose normally. And in the case of exporters, we may give certain rebates in case of domestic taxes. We should also make investment in research and development and technology, so that we are in a position to produce quality goods and services, and they have good recognition in the export market, and so that our exports increase. To enhance exports, we can also find some more countries where we can send our goods and services. That is, where we can export our goods and services. And we can also find out those goods and services which we can export. In addition to the goods and services which we are exporting, we have to find out more goods and services which we can export or which have demand in the foreign countries. Next is to improve the balance of payment position, that is to attract more foreign investment, to have foreign exchange, to get more foreign exchange from the rest of the world. We should reduce imports. How it is possible? To reduce imports, we can increase the import duties. Then what we can do? We can find out import substitution. That is, we are to find out the substitution items for the goods which we are importing, and then we have to raise awareness about these import substituted goods, that so that the residents of the country should use these substitution products in place of imported goods. Next, we can fix the limit of imports of goods and services during a particular period. This is the maximum limit which can be imported. Next is attracting foreign direct investment. We should take steps to attract foreign direct investment. We can offer attractive tax incentives to attract foreign investors so that they make investment in our country. If our tax incentives are attractive, then the foreign investors will bring in the foreign investment in our country. That is, the foreign exchange will flow into our country. Then government of the country should implement sound fiscal and monetary policies. What are those? Prudent management of government spending and taxes. That is, it should have a proper management of the government spending. That is, it should look where it should spend money and what type of taxes should be imposed, or what are those taxes which should be reduced, so that there is favorable atmosphere in the whole of the economy. Then the government of the country can implement suitable monetary policies with regard to money supply and interest rates. These steps of money supply related issues are taken by the central bank or monetary authority of the country. Then the government can also take steps to ensure that there is proper supervision of financial system so that any financial crisis may not arise. Further, we should take steps, or we should encourage domestic savings so that our reliance on foreign investment is reduced. Next is long-term structural reforms. It sometimes happens that if in a country there are lot of bureaucratic hurdles, the investors do not come forward to make investment in those countries. So bureaucratic hurdles should be reduced. Ease of doing business should be there. Steps should be taken by the country to address those political and social issues which discourage the investment in the country. Further, we should make investment in education and infrastructure so that a skilled labor or skilled manpower is there, so that we can take advantage of the same. Then we should take steps that normally it happens that in any country big industries or big houses are in a position to avail loan very easily. Small businesses or the MSME sector, that is the medium level people or middle level businessmen or middle level manufacturers, are not in a position, small scale industries are not in a position to get or avail loan from the financial institutions easily. So the government of the country should take steps that MSME sector easily gets the facility of finance so that they can produce goods and services. And when they produce goods and services, then it will automatically improve our exports, increase in exports and reduction in exports. So in this way, by taking all these steps, we can improve our balance of payments position. That is, we will not have to rely on foreign exchange more. When the import of the country is less, we take steps to improve our exports and take steps to reduce imports, and taking other steps such as physical and monetary steps, then we can surely improve our balance of payments position. Improving the balance of payments position is a complex and ongoing process. It is not that we have taken steps and we take rest. No, it is a continuous process, ongoing process that requires combination of sound economic policies, structural reforms, and long-term vision. And on account of these only, we can achieve sustainable economic growth and development. Now the topic before us is understanding autonomous transactions in the balance of payments. In the context of balance of payments, autonomous transactions are those international economic transactions which are driven primarily by profit motives and independent of a country's BOP position. What it means? We have already learnt that in the case of balance of payments, a record is somewhat like this. On the one hand side, there are credits entries, and on the other side there are debit entries. When we talk about debit items, it results into outflow of foreign exchange, whereas credit items are pertain to inflow of foreign exchange. That is, all those economic transactions which result into inflow are to be recorded on the credit side, and all those economic transactions which result into outflow of foreign exchange are recorded on debit side. So when the record is prepared in case of balance of payments, these are those transactions, autonomous transactions are those transactions which are driven by profit motive. For example, if a residents of the country do export, or if a country does export, why? To earn profit. If we import, it may be possible that import is, by importing goods, we are getting goods at cheap rates. Imported goods are cheap, and the businessman will import goods if the goods available locally are available at higher price, and it will naturally do import so that it can earn profit out of the imported price and the prevailing market price in the market at which the goods are available. So import and export and such like other activities are undertaken by the businesses only to earn profit. They do not pay attention whether by their activities foreign exchange will go out of the country or foreign exchange will come into the country. They only have one thing in mind: profit motive. So all those transactions in balance of payments where the motive is to earn profit, These transactions are known as autonomous transactions, and they are independent of the country's BOP situation. As already discussed, BOP situation may be either balanced, that is, outflow may be equal to inflow in foreign exchange, or outflow may be more than inflow, or outflow of foreign exchange may be less than inflow. In case of these transactions do not take care what is the present position, whether balance of payment is balanced or balance of payment is deficit or balance of payment is surplus. So autonomous transactions are sometimes also known as above the line items. These transactions are recorded first in the BOP accounting, that is, when we prepare the record, here they are recorded earlier in the front rows. They are recorded first in the BOP accounting, and if there is any difference between outflow and inflow, then to cover that gap, if transactions are taken place, they are to be recorded separately. Those transactions which are undertaken to fill the gap in between debit and credit are known as, that is, the transactions which take place to take care of the gap between inflow and outflow of foreign exchange are known as accommodating transactions. We will also read about the same later on. Autonomous transactions are the main component of international economic activity. Then there are certain examples such as export and import of goods and services are autonomous transactions, because import and export is done with the view of profit motive. In the same way, people may purchase, or the residents of the country may involve in purchase and sale of stocks, bonds and other financial assets in the international markets with having an eye on profit. In the same way, foreign companies may make investment to establish or expand their business in the country. They have only one motive in mind: to earn profit. After recording all autonomous transactions, the balance of payment may show a surplus or deficit depending on the net outcome of all economic activities. It means that when we are preparing the record of balance of payments, and here we are making debit entries and here credit, and when we total debit and make the total of the credit side, that is, what is the inflow of foreign exchange and what is the outflow of foreign exchange. Outflow will be mentioned on the debit side, inflow will be mentioned on the credit side, and when we make the total of both the sides and we arrive at surplus or deficit, that is, credit may be more than debit or credit may be less than debit. When these two situations are there, then the net outcome may be surplus or deficit BOP, depending on the net outcome of the economic activities. That is, economic activities may either result into deficit or surplus, though it may also result into balance, that is, inflow of foreign exchange is equal to outflow of foreign exchange, though it is very rare. Either it is surplus or deficit. Mostly it is deficit balance of payment situation in most of the countries. Then we will also discuss here accommodating transactions. We have learnt that autonomous transactions are known as above the line. Now accommodating transactions are known as below the line items, and they are recorded to balance out any existing surplus or deficit arising from autonomous transactions. That is, when autonomous transactions take place, they may result into either outflow may be more or inflow may be more. Inflow of foreign exchange may be more or outflow of foreign exchange may be more. Any of the two situations may be there. So, to fill the gap between the two, these transactions, which are known as accommodating transactions, are recorded. That is, the entry of autonomous transactions is made. These transactions represent the deliberate government interventions to influence the BOP. That is, accommodating transactions are undertaken by the government of the country. That is, if outflow is more, that is foreign exchange which has to leave the country is more than the inflow of the foreign exchange, then to fill the gap, the government may resort to foreign borrowing, or there may be official reserve movements. That is, the government of the country always has some foreign reserves. Then it may make entries with regard to the foreign exchange reserves. Now the topic before us is the role of accommodating transactions in the balance of payments. Accommodating transactions are also known as below the line items. We have already learnt that there are some transactions which are known as autonomous transactions, and autonomous transactions are those transactions where transactions are taken internationally to earn profit. Autonomous transactions have only one thing in mind: profit motive. They have no concern with regard to the situation of BOP, whether it is surplus or it is deficit or it is balanced. Autonomous transactions are take place only with the profit motive in mind. We have already learnt that in case of balance of payments, there may be outflow of foreign exchange or inflow of foreign exchange. The economic transactions which take place between the residents of one country and the rest of the world may result into outflow of foreign exchange or inflow of foreign exchange. If there is outflow of foreign exchange, these are recorded on the debit side, and if there is inflow of foreign exchange, these are recorded on the credit side. So when we total out these economic transactions, autonomous transactions, that is, we make total of the debit side and credit side of the autonomous transactions, it may either result into outflow of foreign exchanges more than inflow, or inflow may be more than outflow. Balance of payment position is very rare. That is, outflow is equal to inflow of foreign exchange is rare. Normally, either balance of payment is surplus or deficit, and most likely it is deficit. So when we record the autonomous transactions, that is, those economic transactions which have profit motive in mind. For example, if we export or import goods and services, we have one thing in mind: profit motive. Business is done only with the profit motive in mind. We export goods to earn profit, and we may also import goods with having profit motive in mind, because imported goods and services may be available at less rate than the if they are produced locally. Then autonomous transactions are recorded first in the balance of payments record. That is, when we are preparing the record of balance of payments, in the front lines, in the front rows, autonomous transactions will be recorded. And when autonomous transactions are recorded, we will calculate the total of debit and credit side, and they will show whether there is net outflow or net inflow of foreign exchange. And on the basis of that, accommodating transactions are undertaken by the government. So accommodating transactions are the deliberate actions of the government or the central bank to address imbalance arising out of autonomous transactions in the BOP. That is, if autonomous transactions take place, then as a result of these, there either inflow of foreign exchange may be more or outflow may be more. That is, there may be some imbalance in the balance of payments. So to balance the balance of payments, these transactions, that is the accommodating transactions, are recorded in BOP. For example, if imports are more than exports, it can lead to a balance of payment deficit. Now, what are those accommodation transactions? Whether there are certain examples, yes, there are. Government borrowing money from international institutions such as International Monetary Fund to finance a BOP deficit. It means that if we import goods, say 100 crores import, and our exports are only say 10 crore, then there is shortfall of 90 crore. That is, imports are more to the tune of 90 crores. So to finance this, government may borrow money from the International Monetary Fund or international institutions to finance this BOP deficit. Other examples of accommodation transactions may be buying or selling of foreign currency by the central bank to influence the exchange rate and manage the balance of payments. Thanks for watching. If you like our course, please spare some time to give a star rating to our course.